Hey everyone, just the video just to kickstart the trading week and the trading month for December as well. Quite a few things going on. I'll run through. There's quite a number of patterns that are coming up too, so I want to run through that. Just the main ones that I think are most highest probability ones. Yeah, quite a fair bit going on. So I'll walk through the calendar first because we've got a few events happening this week. So you've got Tuesday is pretty quiet. Monday you've got Tuesday here you've got sorry, it's going to be this week. Okay. So yeah, you've got some data being released from Australia, Euro, GDP, US as well on the Monday. Mid-sized announcements. They will push them up in somewhat. You've got China data coming on Tuesday night. Key one for Australia, RBA interest rate decision. I'm guessing it'll be a hold, but you just don't know at this stage. I think they're going to wait to see what the US does first. If the US don't raise their rate, then I'm pretty sure, 100% sure, that the next RBA meeting, which is probably in February, will be a cut. Okay. So let's keep that in mind. What else is there? We've got Euro unemployment data, so that's important too. There's a meeting on the interest rate decision this week as well, so it's going to be key if we're going to keep our eyes on that really closely. RBA Governor Glenn Stevens speech, yep. Euro Consumer Price Index, another big key market mover there. Yellen speech, Federal Reserve. So they've got the interest rate decision the week after, so that day's going to be really, really important. There's too much emphasis on it, but either way, it will move the market, so keep an eye on that one. And then you've got a lot of Australian data again, and more US data. Ending the week on Friday night with the non-farm payrolls. Now this one's even more market moving than the interest rate decision. So whatever comes out of this will probably give you an indication as to what they will do the week after. Okay, so these are very important days. Not that most of you guys will be aware of, but I'm telling you now, they're very important because the US pretty much drives not only their economy, but the world's economy. So their decisions do matter, you know. So that's that there. But yeah, no, December is going to be interesting because we got the decision by the Federal Reserve this week. Okay. Basically, they're screwed. They put themselves in a position where if they raise them, or they cut them, or they hold them, they're screwed. If they cut it, then if they raise it, then we don't know what the impacts are. No one knows what the systemic impacts are to the rest of the markets and the economies, right? No one knows. If they don't raise it and they hold it instead, then that's also going to probably send the markets down because for the last 12 to 18 months, they've been saying that they're going to raise them, every month. Month after month, they've been saying that. So the fact that they haven't done it, and if they don't do it this month, the markets are going to react very badly to the news. And essentially it loses all credibility, right? So, and it increases the chances of another QE fall in early next year, okay? That's why I think the Aussie dollar and all the other currencies will rally back in next year. Okay, so we'll go through this decline, right, for the next month or two, and then heading into probably March or April, maybe a bit earlier, I don't know. You'll see probably a reversal in the Australian dollar. So I can see us going back to 80 cents, maybe even 90 cents. So that's the good news there. But again, we can't let it go too high because then it affects our economy as well because we're pretty much in a recession as well. Okay. But yeah, so nothing major is going to happen in December, but the decisions they make is going to determine how fast things will happen, right? Things have been happening a bit faster than what I'd hope. And that's why I give you guys this information and I just freely post it without any care at all because it's important. Some people don't look at it as, some people think of it as, just garbage and all that stuff. That's fine with them. That's fine with me. If they want to treat it like that, that's okay. It's their wealth, your money. your money to protect, and there's an opportunity, So a lot of stuff I've been putting it's very negative. I understand that. I get that. It's negative. It's a bit doom and gloom, but not one person has ever said that there are positives out of this. There's a lot of positives. You will go through this negative phase, maybe 1 year, 2 years, or 3 years of bad news, but out of that comes opportunities, right? So if you try to position yourself now, then you might come out of this really well off. That's the positive there, and so if you want to treat it as being negative, then that's how it's going to be done. It's going to be negative, and you're just not going to see anything. It's just going to get worse and worse for you, right? But the other positive too is that the financial system it's a debt-based system, monetary system. It works by creating debt. That's how it works, right? If it doesn't create debt, it fails. And we need a new system. It just doesn't work, We need the fiat currency system just doesn't work. So out of this, we would hope that to see a new kind of financial system put in place. And there are some steps already being done by the IMF and so forth to implement a new currency, a reserve currency system, right? So the US dollar is going to fail, so they need a new reserve currency. So they're already working on that, and I think it's called SDRs, special drawing rights. So don't be surprised if you start hearing more about that in the next year. But yeah, you want to position yourself, because once this currency dies or gets dethroned, and then this SDRs come in place, you don't know what's going to happen to what you have now. If you had $100,000 in your account, that might be worth $1,000 the next day. You don't know, So you just got to keep an eye on it. It's very important. But again, the positive out of this is we hopefully will get a new system. It's a lot more fairer, not so much controlled by the banks and the institutions, right? But that's what we want. We don't want the old people putting in a new system. We want new people that are not going to stuff it up, basically. So let's see how we go from there. But yeah, it's very important. You guys should really just take some time, just do some research on it. Don't listen to whatever I say. Just take what I've got and then just go with it. And if I'm wrong, then let me know. Okay? Cool. All right, that's my spiel. Aussie dollar. Just want to go through Aussie dollar first. So I'm just going to look at the daily charts in the 4 hours. Okay, I'm not going to go down to the lower intraday charts. Otherwise, we'll spend too much time. So we had this bat pattern that I drew probably over a week ago. It's finally starting to go down, right? It was kind of hanging around the top for a while. For a moment there, I thought we might fail. It's going to be interesting to see where this goes. So there's a few levels we can look at. But we could expect to see this go down as early as Monday, right? So if I do a fib retracement, it's heading towards the key 38.2%, and the 61% is down there. We might get a rebound off this level. We don't know. Maybe the 50%. But we'll have to wait and see. But at the moment, I sent out a video on Friday, I think, and I said that there is a potential. If you do want to get short, there is a potential opportunity to go in there and make a quick trade, which would probably be less than a day. Which is if the market does press back up into previous resistance, which is this level here, then there is an opportunity to go short, and then ride this one down to maybe around the 71.49s, right? So you're looking at potential trade worth of 60 pips, right? So if your account size is say $1 a pip, then that's $60. If it's $5 a pip, then that's $300. Just depends on your account size, right? But I think most people that start off will have, say, micro accounts, which are usually 10-cent pips. So that would be 10 cents times by 60 pips is what, I don't know, $6 or something like that. So still money. So yeah. So just keep an eye on this one. I would expect maybe a potential reaction around this level here, but there is a possibility that it might fall through further down. Okay, so I was hoping to see a bit more strong than this, and get ready for the Tuesday RBA announcement and a push up higher. But we'll just have to wait and see. I've got a trade in there now to short it, but we'll see how this goes. So either way, we should see a reaction there. So that's that for the Aussie. No standout trades, but we'll continue. So this bat pattern is still playing out. Okay, so we're about to hit target 1. All right, NZDUSD. I think there was more on this one. Okay. Okay. So there's 2 patterns on Euro. I'll go down to the 4 hour. Okay. Okay. So what you'll see here is we had a cipher pattern here the other day. It completed at the D completion, went down to hit target 1, halfway through target 2. I still haven't closed out the trade yet, so I've already booked in half profit. So what I did was, as soon as I hit target 1, I closed half the position, and then my stops, which were originally about here, I've moved them to just about here. Okay. The reason I've done it ahead of where I put my stops here now, so stops go there. The reason why I put it there is because I always like to make sure that when I break even, I don't just break even, I cover the cost of the spread and the commission as well, okay? Which is not much, but you just need to take that into account, all right? So target 1 I think was about here, and I closed out the position. I closed out 50%. 50% close, yep. And then I think target 2s are about down here. So it got down, not far from it, and then it pushed back up. So actually, I might have even got stopped out. I have to check. I haven't really checked yet, but it seems to it's going back down now. So if I got stopped out, that would have been a bit of a bummer. But yeah, anyways, so target 1 definitely hit, target 2, and we've also got a potential Gartley pattern, right? So I'm waiting for the price to go down to this level here before I take position. But again, I'd be looking for targets for target 1 being here, and then target 2 being around this level here. Stops would go about there, so you're probably risking that much. So you can do 2 things, right? You can take the trade right at as the rules say, at the 78.6%. You can take the trade as it is and run with it. But also there's a potential for a double bottom. Okay, so double bottom here, potential for a double bottom. Also, where we complete here, there's structure, right? What I tend to find is that wherever the structure level is, if there's another structure level before that, price tends to get pulled to that next structure level. Right? I don't know why, but it just does. So you can go about this in a couple of ways. You can just trade it as it is, and then be aware that you might still see some downturn maybe, and live with that because it's going to go back up hopefully. Or you can take the trade at the 88% as well. That's going to be depend on your rules. So whatever your rules say, will tell you what to do. Or you can take 2 positions. You can take a smaller position here, say 10 lots, and then you can take 1 lot, and then you can take another position here being 1 lot, right? Just so you can be covered. Or you can go with the trade as it is here, and then if price action does go down here, then take say maybe another half a lot position or something like that. It's up to you how you want to carve it up. But either way, there's an opportunity here. It's a good trading opportunity. Okay. But that's it from there. I won't go into further on about that one. EURUSD. Let's go quickly to daily. Alright, so daily I've already shown you this. We've broken through this trend line here, so we went basically down from there. Now I'll zoom into the 4 hour so we can see what's happening. Alright. So I've got a what's this Gartley pattern. It's just a weird looking Gartley pattern, but they meet the rules, so it's all good. So what you see here is on the 4 hours, you see this continuation, right? So you've got price actions broken through the trend line, right? Broken through. Let me draw this. Hold on. Clearer. Hold on. a sec. Alright, so price actions come through down here. Right? Come through down here, pull back, test the previous structure, and resume the downtrend, right? Now there's actually, you know, if you're a really active trader, you can really, all these moves down here, you can just buy, sell, buy, sell. There's like 5 or 6 different trades here, if you really want to go that far, right? That's what I used to do, but it's too much time for me now. But I used to buy and sell on the pullbacks, and then as it begins to show reversal signals, then that's where I just stop. But anyways, so yeah, it's come down here. We've had this nice little harmonic move down, right? It's making lower highs, lower lows, and then we've come to the point where we've put in a reversal pattern, so a potential double bottom, okay? That's a trend reversal signal, okay? We've also got a Gartley pattern as well. So what this says to me is there's 2 trades that come out of this too, and I can do another video to go in a bit more detail. What I mean is there's a technique called a 2618, which I won't show you now, but I can link you a video to one of a bunch of other guys that have done a video on this that explains it really well. But basically, you've got the 2618 trade is basically a safer way of trading the double bottom. All right. So what happens is when you trade a double bottom is you don't, as soon as it's confirmed, right, that we have a double bottom at the close of the candle, then you would enter at the next candle, right? The next open of the next candle, you would enter to go whichever direction you're supposed to go. In this case, up, and then just write it up as it is. The problem with that is, price action will probably. You don't know price action might continue down, right? So you get kind of stung with that. So that's why it's a 50-50 opportunity. You either go up or down, so you can't push through. The 2618 trade, however, is the same thing, but you're kind of waiting. You're letting price break out if it does break out, and then pull back into 61.8% before you buy. So it's a conservative approach. Okay, so I won't talk more about that, but that's where it is. Now the good thing about this is what I'm going to do is, and this is where you have to kind of develop a strategy as how you treat these kind of patterns, because you've got an advanced pattern here too. So you know that if this completes, there's a high likelihood that price action will go down to say a 38% or to 61%, right? So what do? Do you buy now, or do you let price action do what it's going to do, let the pattern play out, and then buy back in, which is going in the 2618 trade? Either way, you can do it either way. I'd prefer to go with the bat pattern first, take that trade, so it's the first trade, and then as it goes down to 61%, close the position, and then look to rebuy for the move up, because this is gonna. I think we're gonna see some higher euros coming soon. I think it'll be one of the last moves before the interest rate decision on Thursday. So we might see the euro actually crash down further. Okay, so just keep that in mind. But you've got 2 trading opportunities here. You've got the bearish back in the 4 hour, and then you've got a potential 2618 trade. Right? Just YouTube that, you'll find heaps of that stuff on there. But the other thing also is we've got hidden divergence, which basically means we're likely to see prices go up. So just keep that in mind. What else is there? Okay, so that's the euro there. That's done. USDJPY. Alright, let's go to the daily just quickly. Alright, daily we've got this big. I think this pattern's been invalid. No, it's okay. So this pattern's already completed. It's very slow. It's slowly coming down. But I've got 2 smaller patterns in there. You can notice it's kind of doing this wedge. Price action is now kind of doing this wedge pattern here. So what I'm expecting is price to kind of just basically trade within this channel, really, and then just get smaller and smaller and smaller contraction before expansion. So at some point, we're going to see a break to the upside or the downside. Okay. If you zoom to the 4 hour, 2 patterns, you've got a cipher pattern, 2 cipher patterns, I think. And a cipher and a Gartley pattern. So completions are relatively close, right? So what I'm guessing here is that we've kind of hit a top here, price action would go back up to retest that structure level before either resuming down or breaking out. I think it'll resume down first before another break. Keep that one in mind. I've got a trade in here already. I've got 2 trades actually. But what I'm watching for is this bit here, potential breaking structure, because we've established a trend. So we've gone, new structure high, new structure low, lower high, lower low, lower high, and then nothing, right? Pretty much dead even there, and we're looking for potential break of structure to say that this market is now switching back to the upside. Okay, but yeah, there's 2 patterns there for USDCAD. I don't think I have anything on USDCAD, but let's just check. Okay, so daily pattern week. All right, so cipher pattern here. Still a fair way away, so I'm not going to worry about that too much. But we're kind of at a high now, right? And USDCAD really moves on against oil, right? So whenever oil moves, CAD goes the opposite direction. So now that we've kind of got this kind of similar to a double top, right? If I go on the weekly, it might actually show me a bit more clearer. Yeah. So yeah, okay. Let me just hide this. Right. So we've got potential double top on the weekly, which is interesting. So if I go to the daily, what I'm expecting is a potential reversal on this side. So USDCAD, we might see the reversal down there. I'll show you oil later because it does time with oil, but keep that in mind. So I've got this, I'm still waiting for the reversal pattern, so I'm not going to get involved into it yet until I get a reversal or confirmation signal. But I'll be watching that pretty closely. It might be a good trade. EURAUD, I want to show you this one. This one's a good opportunity. Okay, EURAUD. Now, EURAUD moves very fast and very large too. So you can make a lot of money from these pairs because they move the price movements are so large, but that also means you can lose a fair bit too. So your stops usually need to be a lot wider than normal. But I like trading this pair either way. So not much is, well, if I go down to say this, go further out a bit, price is kind of respecting this level, this trend line here. So we've gone back up here, but we've had a really pretty sharp slide. So what I'm expecting to see is a bounce off this trend line to the upside, and then possibly a retest of one of these levels here before resuming its downtrend. Potentially, all right? We don't know yet until we see more evidence. But if I do a fig retracement from swing high to swing low, you get potential 38% retracement here, potential reversal area, or the 50% area. If you want to be aggressive, you can take that 38%. You want to be more conservative, then you just wait for a price to retrace back to the 50%, where you've got a bit more resistance here, a lot more stronger resistance here than over here, right? So this can really get taken out. But there is a potential trade there to look into for the move down. There is a smaller one on the 4 hour, but these 4 hour ones are really just day trades for me. Oh no, actually, the 4 hour, no, they're swing trades, sorry. 1 hour and below would be more day trading for me, probably. But there's an opportunity here. There's also a potential fib inversion trade, which I did a video on a while back. So if you want to have a look at that, just go back to that. But there's a potential for a fib inversion right at the 161%. So that's also another sell signal. So if it does hit this level, sell down. Again, with cipher patterns, I usually have a rule in there to say that I don't have to enter at the 78%. I can enter at the 88% too. Okay, so that lines up. I've got some confluence. So my trade will probably be waiting for that level there before I enter. All right, cool. All right, enough of currencies. Stock market, ASX 200. Now I just want to zoom out to the weekly. You've got a couple patterns. There's actually more patterns than this. I've just highlighted these particular 2 patterns. We've got 2 patterns that are lining up right at the same level, right? Pretty much identical. So there is a possibility that we might see price action, despite the bad news that are coming out this week and the volatility, we might actually see the stock market hit this level here this week. Next week, I'm not too sure, but just keep that in mind. So if we do hit that level, which is 5,600, which is still a fair way away, then that could be the top for now, right? Gotta keep. This is where things are going to get pretty interesting. We might see some sudden moves up and down or crashes that we just can't anticipate. So to be really careful. I would not be buying any stocks right now. I don't think I'll be buying stocks for at least another 12 months, unless I know what I'm doing. So just be wary of that. And again, I think you should go and look at your super, your self-managed super fund, or whatever your super you got, and start looking at reallocating those stocks or funds, because you don't know what those funds are. They could be investing in shitty funds, and I'm pretty sure there will be. So you might want to look at that and see, well, which one's going to work best for you, because there's cycles, right? So markets go through cycles. So this might be say for example, this is a property boom. That usually means the stock market doesn't do too well. But once the property boom's over, stock market does well, or oil does well, and gold doesn't, or financials do well, and so forth. So you need to reallocate it. You just can't keep it in the one area. You need to reallocate the funds as necessary. So keep an eye on that 5,600 level for a potential move down. Now, if I look at the weekly, longer-term time frame, if we do see a correction to create new lows, so that was our last, weekly low. If we do create new lows, and you're looking at these areas here being the 4,300 to 4,400 area, so potentially that could happen in the next probably month, I guess. Not sure about before. I don't think it will happen before Christmas. It's just too soon. They usually like to have a Christmas rally and then create some confidence in the economy. So won't see anything there. But starting next year, I think we'll start to see all the. That's where all the issues will start to appear. Gold. Okay, gold, like we said, we've broken structure. Right, we've broken this structure level and we're looking to head down, which is what I said earlier. Now, I'm looking for a pullback down to this current structure level here, so which is the $1,000 mark, but as low as say the 900, 950 area as well. If I do a fib retracement from the swing low to swing high, I get a 78% at 948, right, roughly. If I do a big extension, then we've got some confluence. I'll just delete these lines, sorry, so you can see clearly. Alright, so if we look at that, we've got some confluence at this level here. So that's already telling me that this is a good area to watch, right? We've got two key Fibonacci numbers lining up around this level here. So if the market goes down, I've already got two orders to sell this already. So if it does go down, then these are small orders, by the way. I think I only played like about 5 lots or 10 lots or something like that. But if that goes down there, I've got two trades. That's $1,000 each. That's $1,000 each for the trade. So $2,000 trade, which is pretty good, right? So I've already got 2 lots I put in on Friday. Let's see how we go from there. Now, I think this is just a normal, a false break to the downside. I think we're going to start to see some, we'll see gold recover. It will just be, I think this is very short term. But come 2016 is the year for gold, I think. So just keep an eye on that. If you don't have any physical gold, I think you should start looking at it. If not, there's other metals as well, like silver, palladium, and stuff like that. Then you should really start looking into. I won't tell you why for now. Oh, I've already told you why. I've already said this like 50 million times on Facebook. So if you haven't got the message, then yeah. But I won't go through it again. What else is there? Oil, US oil. Oil. Okay, on the daily. Now, clearly in a downtrend. Now, oil is going to be very interesting in the next couple of weeks or longer. with the with everything going in Syria as well, it's really hard to say. We don't know if oil prices will go up or go down. People will think it will go up because there's wars in the Middle East and so forth. But you've got to understand that the ISIS guys, right? They also extract this oil too to sell it. So there's actually, although it seems like we might have issues with oil trade, it's not. You've got to think the other way because these guys are also taking oil to sell it too. So we might actually see a move down, right? So it's really hard to tell at the moment. You're just going to have to wait to see what the market does. But I think once this market moves, it is going to move hard. Oil, it's going to move. It might even go back to $80 a barrel. So just keep that in mind. But also, if it doesn't, it's going to crash as well. So it's a very, if you want to be a gambler and take a bit of a risk on this one, and go for it. But just be careful. Be mindful that these guys are also taking oil to sell it, right? And that's why staying across geopolitics and staying across what's going on in the world is important, right? Because I had a bunch of guys that were kind of just like saying, well, why do you put this stuff up for? Blah 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 blah. It doesn't mean anything. Well, it means something to me, right? And if you don't want to listen to it, that's fine, right? It's your choice, but I'm telling you, it's really bloody important. So yeah, so that's that there. But there are a couple of trades that we've got a Gartley here that's completed. So, and if I go in the lower time frame, we can see what happened there. But this is where I was talking about how USDCAD and US oil tie in very closely, right? They're very inversely correlated. So let me just do that. Let's see. So it's completed right there. So we've got a completion here. We've got a little double bottom as well. And then price has gone back up. So I suspect that it's going to head towards the target 1 area. We're looking at target 1. Target 1's up here now. So we're looking at price action to go here. I'm not involved in the trade yet, right? I might think about buying on the retrace if it does retrace back down here. We've also got 2 other patterns, which I'll zoom into the 1 hour just to show you clearly, but I won't talk for too long on this one. You got 2 patterns here that have confluence right at this level here. So that's a good level to look at entry into oil. So keep that one in mind. I won't talk more about that one. The last one I'll talk about is the IWM. Now, I think I spoke to you about this a couple of times. The IWM is Main Street America. That's where the small businesses, the mums and dads, that drive the American economy, right? So usually we get more indication, we get heads up in what's happening in the IWM. That gives us indication what's going to happen in the Dow Jones and the NASDAQ and so forth, right? So this is kind of like a leading indicator. It gives us a lot of clues to what might happen in the general stock market. Now, we're waiting for the monthly close, which is going to be as of Monday, I think. So what we're looking for is where this will close at on the monthly. If it closes above, then we're looking at potentially good news for the stock market. It will keep going higher. If there are signals that it might be reversing, then we might be looking at bad news, all right? The monthly chart is important, but what I'll show you here is I've tried to zoom in as close as I can to have a look at it, but we're kind of just touching that. We don't, and it depends on how you draw trend lines. Some people draw trend lines from the body. Some people like drawing it from the wick. It just depends how you draw it. But if I zoom into the weekly, you'll see this kind of action here. The weekly, you've got a press back down, and then you've got this this bullish pin bar, or what you can call morning star. I think that's what it's called. And then it's kind of just gone, consolidated up and down like this, and then it's kind of pushed up, and then retraced, right? Rejected, and then the push back up. The important thing also is it's closed the week, right? The candle's closed the week on a higher high, right? So it's closed above this previous candle, but also it's closed above the previous high. So that's pretty important, right? So that signals to me very bullish, right? The fact that it's closed the last candle higher, the previous candle obviously higher, and the last high higher as well. And we're kind of at this resistance zone here. So this is a make or break at the moment for the IWM. If I look at the daily, we've got this is the nice bullish move. slowly. So what you usually expect to see from here is this sudden rise, and then sorry, let me just go there. So what you usually expect is this sudden rise, slow rise, a pullback, right, and then push back up, right. So keep an eye on that one, because this is going to tell you, this is going to give you a heads up or leading indicator into what the stock market's going to do. All right, always happens without failure. Also, junk bond index as well is another leading indicator that you can use as well. So that's that there. I don't think I have anything else, but those are the main pairs I'll focus on, and I'll keep track of this. And once I enter the trade moving forward, I'll kind of let you know as well, so we can track it and see how it goes. But I think that's that. If you have any questions, feel free to let me know. I'm going to post it on YouTube as well, so I want to say it. But if you do watch it, then please subscribe and like. Didn't think I'd say that, but and yeah, hopefully you have any comments or if you want me to answer any specific questions, then feel free to shoot them through. Okay, thanks guys. Cheers.